With trillions in stimulus, it's important to see where all of that money is flowing. Could it be in the stock market? Could it be in real estate? Or could it be spent on liabilities? The important factor here is that the tax dollars are being handed out to pump up the economy. At least that's the intention. Whether or not it will have a positive impact, that's something that time will tell. You came here for the truth, so let me unveil that for you. I've got a lot of information, I've got a lot of charts today. We're going to cover a wide variety of topics, but essentially above all of that, we have the central banks, who we're going to talk a little bit about today, and we have, of course, their activities. And what they do is really the end result of how they want everything to happen. If they bring interest rates down to this very, very low level, it always encourages speculation. That's the desire. And if people would spend some time looking into their creation, looking into how this was all set up, they will see that this is in fact how they can bring people in and they can punish them in the medium and long term. In the short term, everybody is happy because interest rates are low. They can borrow more money. Corporations are able to borrow under this. But if you see that when we go through a major cycle, not a short cycle, but a major cycle, very few names come up. You always have these massive mergers and acquisitions that take place. There's been some of those, but you see that whenever there's a major fallout, let's say it's in the oil industry, only the big players will survive. They gobble up the rest. The same thing goes on in the financial industry. And I'm sure that at some point it's going to happen in the tech industry. And I am very interested to see when this cycle comes around, which it must inevitably happen, where we go from there. There's a lot of talk about regulation. There's a lot of talk about extra scrutiny, but I want to see how that all really unfolds. So much to talk about. Let's go. Tuesday's trading session, the stocks declined as oil tumbles, bonds advanced, and you see that Germany and other places around Europe, they're dealing with their issues with the lockdowns and so on. That, of course, has an impact on equities directly. There's a lot of uncertainty there that's still going on a year later, and the markets don't want that. Of course, they want to make sure that everything's going to be okay, so they're looking for the Federal Reserve. They're looking for more stimulus. That's why they're hoping that not only does $1.9 trillion stimulus from the US come out, that all other governments do the same thing. If I remember reading correctly, the ECB expanded on their purchases. This is what the market needs. It needs constant and never-ending intervention, no matter where the market is at. It doesn't matter that we're at or near a record high. It needs to go higher. It needs something to push it up because it can't do it on its own. Inflation stations. UBS calculates problem inflation levels for different types of stocks, and you could see it on here. All I wanted to note was that it depends on the grouping, but look at this and how everything is impacted by higher levels of inflation. Nobody in the financial industry really wants to see this, and unfortunately, it looks like we're going in that direction. Now, things can turn around, certainly, but when you pump up, not just the 1.9 trillion, but look at the $3 trillion stimulus plan that I talked about in the previous video that they're planning on doing. That's just one country. That's the United States. Then look at it all over the world. I don't see how it can go any other way. In addition to that, we see the new batch of $1,400 stimulus payments coming on Wednesday, and this includes people with debit cards, paper checks. What they're going to do with it, we'll have to see. Ultimately, I hope that people are using it wisely. If they've got debt, pay down the debt. If they have a lot of debt, then hopefully they're taking care of the ones with the highest interest, the ones that need to be paid right away, and then go down from there. This is important, of course, because that money needs to be used not in what they say. They want you to go out to the restaurants and they want you to do all this stuff to pump up the economy. And that's a good thing to do for sure in general. But you've got to worry about your own situation. And certainly if debt is piling up, that's one thing that needs to be taken care of. I know people that will invest in their retirement account when they have credit card debt. It makes no sense. Pay it off. I think it's so wise to do so. The national eviction ban is set to expire at the end of March, but they say that they'll likely extend it. We'll see what happens. I don't know exactly how this is going to unfold, but this has been one thing that has been keeping it all together because there are so many people that haven't been able to pay their bills. And I'm watching it very closely. Yes, they'll likely extend it, but we were surprised about what the Federal Reserve did and the SLR as well. So you never know, but likely they'll extend it. I just don't understand how landlords are keeping it together when many of them were already redlining. So we'll see the data when it comes through. This article here is talking about when you look at areas in Ontario, in Canada, they're talking about Cottage Country and how the prices have been pushed up significantly. And this is an area where, let's say it's 2 hours, 3 hours north of the city of Toronto, and the prices are they're going sky high at this point. And why? Because people can work from anywhere and they're deciding, you know what, we can get away from all of the hustle bustle. We can get away from this and maybe buy a cheaper house. So maybe they're in a condo today and they think, well, we can go up here. I'll work from home. Doesn't matter. I've got an internet connection. So it's not just other cities that are getting bought up. It's places that, you would call a town or more rural areas that are being pushed up in prices where normally the people in that area would not see homes appreciating at the level they are. And of course, as a result, lots of development taking place. That development uses a lot of different resources. Those resources, of course, when you look at the actual industrial commodities and other things, have been rising like crazy. So we've been seeing this going on all over the place. And I just wanted to make note of that. If you have 23 seconds, you should definitely watch this. And you're looking at Jerome Powell speaking here. He's with the Biz and the Bank for International Settlements. I guess it was part of a conference or what have you, a virtual conference. But he speaks here and clearly it shows you that clearly people, even at this high level, do not understand certain primary things that are happening today. He's talking about number one, gold, talking about Bitcoin, talking about the US dollar. And the way that he argues, it's as if he has no clue what's happening. And that's something that's unfortunate for a lot of people because they believe what Powell's saying. They believe the Federal Reserve. They believe in the financial system. They put their money in the banks and they actually think that it's safe. They think for some strange reason that all of these institutions have their best interest in mind. And it's crazy. So part of what he said in here was that, essentially trying to suggest to you that the US dollar is a store of value. That's what I got out of this. And it's so ridiculous because you can see it over a period of time where clearly that isn't the case. You look Bitcoin aside, he's suggesting it's a speculative asset and so on. Okay, put that aside for a second. You can see, take any number of years, the US dollar has lost value over that period of time. Now, maybe you relate the euro to the US dollar and you could, track it on a chart. Yeah, okay, I get it. But look at the value of the dollar compared to real goods, and I think it's pretty clear. The big trend right now, and this is all, by the way, linked to what I've been talking about since the beginning of this video here, where the money is going. Why is this the case? Because there is this never-ending cycle of more money being pushed in. And right now today, Lance Roberts posted it, the value trade is now a momentum trade. Value stocks are starting to screen as momentum. Number of stocks which screen as both value and momentum, that has picked up here in 2021. At the end of their post, they mention this, and I wanted to cover this because I think that they always have really good sound points. Not just Lance Roberts, but generally all the people that write on here, real investment advice. We are firm believers in, quote, value investing. And the way that Warren Buffett describes value investing, and Charlie Munger, is essentially finding companies that are valuable today and into the future. Not value stocks necessarily, but essentially you're going to buy it today and it will provide more value over time. Okay. However, after years of artificial interventions, accounting gimmicks, share buybacks, and massive balance sheet leveraging, there is little, quote, real value in the markets currently. Given that the markets have not been allowed to reset, speculators are now simply chasing the next momentum trade called value. For now, we have to continue to navigate markets for what they are rather than what we hope they could be. We suspect that this year could wind up disappointing both economists and investors alike. So I want to make clear what they said there, and they always do this. They realize everything is fake and manipulated and so on, and they are trading accordingly. Okay, I want to make that clear. Take a look at this chart, the S&P 500 real index versus exponential growth trend. And you can see that trend line, the dotted line that's going across. And take a look, we've never seen such an extension in this period here. And on the left-hand side, they're just showing you the deviation from exponential growth trend. Take a look at this right now, 167%. And it seems like it's going higher and higher. And that just gives you an idea of how far we've really come. There's no, you look at this on a historic level, fundamentally, technical analysis, on every single level, things are off the charts. And there's a very clear understanding of why this is the case. And it's obvious. Quantitative easing and the stimulus have completely thrown everything out. And people say, well, hey, we're just going to forget about all that. No. Every time we go through the cycles, you look at it historically, it's getting worse. It's more exaggerated every single time it does this. You have higher peaks and valleys, and that's not good as an investor. Because you don't know what comes back up on the other side. You have no clue. And you hope that you've chosen correctly. But nobody really knows. When you come down to these levels here, some things do not survive. A couple quick notes before we finish off the video. I found this to be interesting. I wanted to include it here. West Virginia is again attempting to, quote, break away, this time on the issue of taxes. While they want to raise the federal income taxes to cover overspending, the governor of West Virginia wants to reduce and eventually eliminate his state's personal income tax. If successful, West Virginia would join 9 other states that do not impose state income taxes on their citizens. We'll see what happens, of course, but this is something that it's almost the opposite of the trend that we're seeing in other places. They want to encourage businesses, they want to encourage individuals to actually boost the economy. And there's areas where increasing the taxation seems to be the goal, other places reducing it. And I see oftentimes that people or businesses, if they're getting taxed too heavily, they move out. There needs to be less restrictions around what can be done for people and businesses in order to get them to desire and to have a reason to do business there. Because quite frankly, nomad capitalist loves to use that quote, go where you're treated best. And quite frankly, you look around and it's becoming more and more difficult to find things that fit that line. Interesting note here, Google searches for hope and prayer peak while party and festival slump. That's, over the last several months, we've seen this. And I think a lot of people are really searching for answers during this period. And it's been an unfortunate time for a lot of people. And, I'm talking specifically, on economic factors here, seeing a lot of people lose their jobs, seeing what was happening with the food bank lineups, noticing so much of this unfortunate circumstance at a time when you've got all of these trillions of dollars being pumped into the system, breaking it and making it worse for these people who are in an unfortunate scenario. As if the Federal Reserve and the other central banks around the world haven't done enough. Fed intensifies climate risk focus with new panel. How in the world is the Federal Reserve with simply one real tool that they have, and that is to print digital dollars? That's all they can do, okay? And they're going to, intensify their climate risk. What are they going to? Maybe they'll rent a bunch of planes. They'll take the money and they're going to drop it down from the skies, and that will create like a cloud effect. And got it. I think I figured it out. I think I figured out what they're going to do. They can cool us down with dropping the paper currency from the sky. I don't know. Why don't you suggest in the comments what you think they're planning on doing? I think it's a little bit ridiculous to even look at this. But, if you know me on this channel, I like to bring up some humor once in a while, and this is one of those articles. That's all for this video. If you found that informative, hit that thumbs up button. When you click a button on your screen, you help to support the creator, so thank you very much. If you want to learn about e-commerce, you're interested in selling stuff on the internet, there's a lot of information out there. There's a lot of questions that people have, and I answer all of them in this course. Tons of information for free, the AmazonGPS.com. If you want to learn about the financial system from top to bottom, you have so much to learn, and I break down all the fundamentals in these two books. You can check them out at the link in the description. Have you seen this video yet? If not, you absolutely want to take a look. Click it, and I'll see you there.